Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the latest cues on the D Street, especially with the benchmark index moves, the sectoral action, and all those stocks that are buzzing the most in trade. And of course, it is the earnings season. Which are the stocks that are really moving in trade and ahead, and both after their results as well? We'll focus on several pockets and we'll get you expert views on all of that. But first up, a quick check on how the markets are doing at this point in time. Well, picking up slight pace, but absolutely flat with a positive bias as far as the Sensex is concerned. 59,625 for that one. 60 points of an uptick can be seen for this, just about a 0.1% of an uptick. On the Nifty also, it's absolutely flat with just 6 points of an uptick, 17,625, the current level on the Nifty index as well. But how are the broader markets really performing? The mid-cap 100 and the small-cap 100 indices, is there a change in that, and is there some kind of momentum really building on? Well, as we move towards the second half of trading session, the mid-caps are up by about 0.25% amid a whole lot of choppiness. They've come off the lowest point of the day for sure and have recovered from that point, but definitely still about a 0.25% jump for both these small caps and mid caps. They have recovered from the day's low, but still about 0.25% up. When we talk about the other sectors, as far as the Nifty index is concerned, again it's a mixed bag. You can see the pharma sector, which was on an uptrend in the last few trading sessions, is declining now with 1.17% of a fall. The realty pack has also come under some pressure. Healthcare pack down by 1%, oil and gas 0.25% down in trade as well. Apart from this, you're seeing the FMCG stocks declining as well, about 0.4% of a downtick can be seen for that one. On the upside, however, IT stocks are slightly recovering in trade. Private banks, PSU banks, and the overall Nifty bank stocks are doing well. The Nifty auto index is just about flat with a positive bias at this point in time. So complete, mixed bag is what you can really spot in trade today. Let's welcome our guest on the show. Siddharth Khemkha joins in. He's the head of retail research at Motilal Oswal Financial Services. Siddharth, welcome to the show and thank you so much for taking the time out for this discussion. First up, your own view on how are you looking at the markets currently? I mean, we did see about 8-9 sessions of continuous move on the upside, but after that, throughout this week, it's been rather lackluster and the markets have been stuck in a broad range. How are you spotting the current momentum?
Yeah, thank you, Sakshi, and warm welcome to all the viewers. So, if you look at the overall market setup, I think the Nifty moved up consistently for 9 consecutive trading sessions, gains of almost 3.5-4%. This was on back of two things. It was the earlier part of or the start of the earnings season. The expectation was pretty good. B, the FIs had been consistent buyers during these 9-10 trading sessions. They bought more than, you can say, about 4,500, 5,000 crores in the cash segment. And another significant part was the FNO short position that the FIs were carrying until the expiry of the previous month. From say about 91-92% of shorts they were carrying, that got unwind in these 8, 9, 10 sessions to almost 70-74%. So that helped the market recover. But after having moved up sharply in these 10 days, now the market is kind of consolidating. We are seeing a lot of sector rotation within the large caps. The result season has started with not that great news, as IT companies, there are two major IT companies, TCS, Infosys, not announcing very strong numbers. On the banking side, we had HDFC results, which were in line with expectation, did not excite the market so well now. So now I think going forward, few more large cap like Reliance would announce its number on Friday, ICICI Bank on Saturday, would kind of set the tone for some of these large cap names going forward. The interesting part that we are seeing is a lot of small niche mid cap sectors are doing well. Mid and small cap indices both have smartly outperformed the Nifty in April so far, after having underperformed for quite some time. So I think the market is now moving beyond the large caps. The valuations have definitely become comfortable. If you look at Nifty valuations at about 19-20 times on a 1 year forward, is much comfortable compared to about 24 times that we had seen about 1.5 years back. So that definitely gives a comfort. But as I said, the driving factor from here on will be the earnings, which are not expected to be very strong on a high base. We are seeing some normalization of growth, and that should keep the market in a range for now.
Right, absolutely. So the markets could be in a range, but the focus will be on these large cap names from each of these sectors that you mentioned, which may set the tone for the earnings season and therefore the direction in the markets going forward from here. But let's actually focus on some of the stocks that have already started to move up. I'm talking about the new age tech stocks basket, especially. Why? Because Motilal Oswal Financial Services has begun initiating their coverage on some of these stocks for the first time. That is, I mean, last week we actually saw, you initiated coverage on Zomato with a target price of 70. And so definitely a upside from the current levels of about 53, 54 levels as well. Sharp upside is what you saw. And today again, you've actually come out with a report where you've initiated coverage on PayTM as well with a 34% uptick in the target price as well. I wanted to understand your own sense as to what is giving you confidence right ahead of the Q4 numbers that you're looking at this new age tech basket.
Yeah, Sakshi, very important because this is a segment that has been very exciting for the market as a whole. We saw for the first time some of these new age tech companies in India getting listed because they provide a very high growth opportunity, but on the other hand, they were all loss-making businesses. Very difficult for a traditional market like India to value some of these stocks. So we saw initial euphoria, but with the earnings coming out quarter after quarter, the euphoria died down. A lot of exits happened in some of these stocks. So the pre IPO, you can say the angel investors, the PE investors, they took exit after the listing, and that kind of provided a huge supply overhang. So a lot of changes has happened from the listing days to now, right from the business to the supply. So bulk of the PE investors have exited. So the supply overhang is almost over for some of these names. The business have improved, scalability has improved. Some of them have started showing profitability. So, for example, PayTM on an adjusted EBITDA basis turned around and showed profit in the third quarter itself, much ahead of its own guidance, where it was saying that Q2 of FY24 is when they were expecting. So that was something heartening that the market liked. Even for Zomato on an adjusted basis, they have started showing some improvement in the profitability. So I think that has changed the overall view. Both these companies we like, but they are in different segments. We need to look at it in each segment separately to understand the triggers for both the companies. But overall, if you look at the new age tech stocks, I think these change in the business dynamics, improvement in the overall financial numbers, and the promise of profitability that is now visible, which was not visible earlier, makes us positive on the space.
Okay, so both Zomato and Paytm, you are positive on, and you do see a 30-35% upside from the current levels as well. What about the other new age tech businesses? Let's talk about Nykaa or PB Fintech, for example, with a lot of HNI interest there as well. Would you be also looking at those stocks?
So, Sakshi, we are evaluating the entire space, but we have not yet come out with any view as of now on Nykaa or PB Fintech. But as of now, we are focused on these two companies, which are market leaders in their respective space. So, if you talk about Zomato, we expect the overall food delivery business in India to grow rapidly over the next few years, driven by increasing internet penetration, rising consumption, growth in urbanization, and the acceptability to order food. So that is helping, where we seeing that there are only two players. It's a duopoly market with Zomato and Swiggy. They have survived the onslaught of a lot of foreign entrants, and now it's like a winner takes it all. So I think Zomato is a dominant player in the industry. We expect almost 29-30% revenues CAGR over the next 2 years. We expect EBITDA as well as net profitability while the companies are targeting FY24. Even if we are looking at FY25, we think Zomato will be a large beneficiary of the growth in the food delivery business. So that is something that we feel should be exciting. On the other hand, if you look at the payment, the digital payment side, Paytm again is a clear market leader. They have diversified their business model not only for the consumer payments but the merchant payments as well, and now getting into the financing business as well, which is kind of seeing a strong growth. while they are seeing almost a huge growth in the number of consumer base is almost 350 million. The merchant base is 31.5 million, which is growing at a strong pace. We are seeing the loan disbursement is almost 50,000 crores, and we are seeing that this can see a steady 60-65% growth over the next 2 years and could provide the much needed profitability for PayTM, both EBITDA as well as net profitability by FY25.
Okay, but I wanted to just play devil's advocate, ask you whether you have been giving conservative targets on both of these stocks with the initiated coverage, or would you be looking at incrementally looking and seeing how they perform in the earnings and then perhaps look at revising of these targets upwards?
Yeah, definitely. I think with these kind of companies, the new age tech companies, we have seen the kind of fall that these stock prices have done, and the volatility in their earnings that could be there. Definitely, it's a conservative approach that we would take right now. And as and when the earnings delivery starts improving, you could see further upside in these stocks.
Okay. You initially began by discussing about earnings and Reliance Industries, which we will be looking at earnings tomorrow as well. So one question on that before we move ahead to some of the other stocks as well. I believe you have also increased your weightage on Reliance Industries as well. And what kind of, numbers would you be expecting, and, anything else apart from the usual OTC business that really looks promising to you at this point in time?
Yeah, so I think it is very important to look at Reliance. I don't think the earnings would be pretty strong this time because of the core business, which will be seeing some pressure as we are seeing the crude price falling on a sequential basis for the quarter. Even the GRMs are being under pressure, so that will keep the margins on the overall business a little bit on the lower side. But if you look at the other businesses, again, last few quarters, we have seen that the pressure on the new age business for Reliance, that is a retail business as well as the Geo platform, both having kind of stagnated. The retail business across the retail segments, we have seen pressure, and that is something that I think is putting a pressure on the stock price as well. So at the current level, we have seen that we believe that the valuations after the correction offers a better risk reward after the recent the underperformance, and hence we believe it should be a good price point to enter. Given that the long-term visibility for the company is pretty good, there is also a possibility of value unlocking from the oil and gas, the O2C business with the retailing, oil retailing business getting valuation. Also, on the new age tech platforms, we can see the unlocking of businesses from the Geo as well as retail business. So overall, I think this quarter we are not expecting much of impetus from Reliance, but at the current price, from a long-term basis, I think it's a good risk reward to enter for long-term investors.
Okay, understood that as well. One more stock that has been buzzing in news is the FMCG and FMCG to hotels kind of conglomerate ITC I'm talking about. In fact, it has become the 11th Indian firm to cross the 5 lakh crore rupees market value. This company has been on an uptake the entire 2022. It outperformed. In fact, on a year-to-date basis, it has substantially outperformed the benchmark index as well. Crossed the 400 mark recently as well. Your own thoughts on ITC? And is there anything that investors should continue to look at positively in this stock, despite the kind of moves that we've already seen?
Yeah, Sakshi, I think ITC has pretty much outperformed the entire FMCG space, and rightly so because of the segments that they have been present in. If you look at the core cigarette business, that has shown steady growth in the past several quarters, with the indirect tax regime having been pretty much stable. That has also provided the impetus for ITC to show growth compared to the industry, which is kind of getting impacted because of the rural slowdown, the consumption impact, as well as the inflation impact on the raw material side for all the other staple companies. So compared to that, ITC has managed to show steady growth in its core earnings. Also, to highlight ITC, that the non-cigarette FMCG business has done pretty well compared to, again, the other FMCG business. The hotel business across the sector, we have seen the strong growth in the average room rates. The occupancies have been pretty strong, so that has also helped ITC. So I think the earning visibility is something that is pretty strong for ITC even at this price. I think we have a target price of 450 on ITC, which could give another 10-15% upside. And as I said, the core business of cigarette continues to outperform. The non-cigarette FMCG business has seen improvement both in growth as well as in margins. And to add to it, the other businesses, hotels and other segments, have also been positively contributing to the overall healthy earnings.
All right. Well, thank you so much, Siddharth, for being with us and discussing so many stocks and sectors and your outlook on the overall markets and the strategies that you would advise investors at this point in time. Always a pleasure having you with us on Business Today to discuss more insights about the markets. We shall continue to touch base with you further as well. As we speak about the markets, they're absolutely flat right now. Mixed trade, in fact, as far as the benchmarks are concerned. Sensex turning positive with Nifty still declining in trade, 17,600, about 12 points of a loss for that one as well. So completely lackluster as far as the markets are concerned. But will the second half of trading action be any positive, or will we again see another day of consolidation? We'll continue to keep an eye out on the market momentum, and so can you if you be with us on Business Today TV. Don't forget to subscribe to this platform and also continue to engage with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.
Yeah, sure.